Good morning, traders. Welcome to this week's Elliott Wave Forex and Cryptocurrency Market Analysis webinar. I hope you all had a wonderful week. All right, so this week's theme is, can you make money trading Forex? That is what is on the thumbnail here. So can you make money trading Forex? Not just the Forex market, there are a number of markets. It can be the Forex market, the indices market, the stock market, or any other market. So the question is, can you make money trading Forex? So as I've been doing for the last couple of weeks, and we're gonna have a 10 to 15 minute teaser on that question that we're posing this morning. Can you make money trading Forex? All right, so before we get started with that, let's have a look at my channel, my YouTube channel. Our next course is starting on the 3rd of February, that is next week, Monday. Our course starts. So if you still haven't subscribed for the course, you've got until Friday to subscribe. That is when we're also going to be launching our website after Friday. The price takes effect, no more extensions, everything changes, and you're going to find all the details in the new website. So for course inquiries for the course on the 3rd of February, you can find that information, my contact details, and all under the description of all my videos. If you go to the show more tab, you will find my contact details, my email address. I mentioned last week that some emails go into the spam or the social tab, so I missed those. So if you don't get a response, you can try my mobile number, which you can use via Telegram or WhatsApp. Here we also have a Telegram channel where I post the live links to these webinars, right? So if you want to attend the webinars live, you can look out for the link in that Telegram channel there. You can also follow me on TradingView. So that is the information about the course. We start the 3rd of February 2020. The course is available on videos, so you can start learning as soon as you register for the course. So even before the 3rd of February, it is fully recorded. You can start learning at any time. So even if you're not attending this this coming course, you can just send an inquiry just to get the course content and the structure of the course going forward. So what is going to change from February as far as the course is concerned is that you're no longer going to get the 2 years mentorship. You're only going to get a 6 months mentorship. Not that I'm just trying to shorten the course as much as I can. No, the 6 months is effective. If you're serious about trading, it took me about 3 years or 4 years to learn the theory on my own. But if you're doing this with my guidance, it shouldn't take you that long. So you've got a full 10-day course. From there, you get 6 months of daily mentorship, Mondays to Thursday, an hour every single day. We analyze the market practically, identifying setups. So in 6 months, if you're serious about trading and you've got time, you should be able to learn the theory. So that is how the structure of the course is going to work. And for those that can't really afford the course, obviously I can't take it any lower because what we do in the course is just so much. We do a lot of work. We update all the charts, and we do the daily webinars and all of that. So that requires a lot of time. So for those that can really afford the course, they can wait for the launch of the website from the 1st of February, where you can subscribe on a monthly basis. And that also helps you just to check out if this is really for you. You can subscribe for a month or 2 or 3 months and just check if this is really for you and if you really want to learn more. So all those details will be available from the 1st of February. Right, so send me an email as per these contact details. Now, you will see also we've got timestamps here on all these videos. So this helps a lot if you want to track and check or backtest the analysis on these webinars. You can just click on all of those, on any of those. So you don't have to go through the whole video. The video can be an hour to an hour, 15 minutes. You don't have to go through everything. You can just watch the specific pair that you're interested in. You can just click and it will take you straight to the analysis of the pairs that you are interested in. So that helps quite a lot. All right. So that is that about the course. So this will be available a couple of hours after the video has been uploaded. So do not panic if you see the video uploaded without the timestamps. You have to go through the whole video and edit the video to put on all these timestamps. Okay, so let's get started with today's webinar. As I said, this is a question posed. This is the theme for the week. Can you make money trading the Forex market? Now, how many people actually make money trading Forex or leveraged markets like your CFDs, that is your trading stocks that are leveraged, and any other market for the market? How many? I mean, when I check the statistics, it actually says about only 10% of the traders actually make profit. Now, where is this all coming from? Because when I look at the trading technicals, it all seems just too easy and everybody should be making money. If anybody who understood even support or resistance, they should be able to make money. But trading is so much more than that. Trading is so much more than just technicals. I am a trained mechanical and electrical engineer. I've got those 2 degrees. And that means I've done a lot of mathematics, even specializing with a subject called numerical methods. Does that give me the edge in the market? Now, I want to answer that question. Does that really give me the edge? Because when you look at the Elliott Wave theory itself, this is very simple. Okay, I could say very simple because I've learned it and I've studied it, but maybe not so simple for everybody else. So when you look at the Elliott Wave principle, it seems like something that anybody can learn, regardless of your background. Now, anybody can learn this. And why am I saying this? Because I've seen people without any mathematical background learning the wave theory. Some are even better technical traders than I am. People that I have trained in my group identify structures better than I do. So what gives a trader an edge in the market? It's somebody who is able to control their emotions. Now, how many times have we heard the word emotion? Now, everybody knows that trading is a very emotional experience. Now, every time you trade, you go through a number of emotions. But why are we not focusing on those emotions? I mean, we spend hours and hours, basically 98% of our time learning technical trading, or some even fundamental trading, but nobody really gives time to understand the emotions that you went through when you take a trade. And that is absolutely critical. Now, it does not matter how good your strategy is, how good you are technically, whether you're trading Elliott Wave theory or support or resistance, harmonic pattern, any of those strategies, at the end of the day, you are going to trade with some emotions involved. And let's talk about those emotions. And those emotions comes from the psychology in trading. Now, what is the psychology in trading? So the psychology in trading is the force that makes the market moves. So that's what makes the market move. So market moves based on the psychology or the reaction of the market to the events that happen on a day-to-day basis. So those pessimisms and optimisms coming from the market, that is what moves the market. Now, there are a number of emotions, 4 emotions that we're going to talk about that you have heard so many times. Now, let's talk about those and we'll see if we can be able to control them. So if we've got emotions that we go through when we're trading, we should be able to find a way to control them, right? Because that is what is making us lose money in the market. So now there are 4 main emotions. Greed, we've all heard about greed. Fear, hope and regret. Now, what is greed? So greed is defined as the desire of a trader to try and make unrealistic profit. Now, you can make unrealistic profit once in a while or once off a number of times, but it's like a thief. You can get away with stealing so many times until you get caught. So just the same as greed, you can steal so many times, make money so many times, but it eventually catches up with you and you don't necessarily make money. So a greedy trader only focuses on how much money they can make, and this emotion frequently leads to ignoring proper money management and often prevents a trader from taking profits on a winning trade. Now, it's not just about losing money because you're greedy. Greed comes also when you are in profit. You're in a good trade. It's making money. It's time to exit, and you don't exit, and you actually give back those profits. Now, I can attest that There's so many traders that have made so much money, but because of greed didn't take profit and they'll give back those profits back to the market. That is greed. Next one is fear. Now, fear is a survival response and probably the most powerful of human emotions. Okay, so let's just talk about. When I was reading about fear and all these emotions, and when it says it's a survival response, it actually made sense, and it not only in trading. I'm a marathon runner, I'm a bodybuilder, and all of those sorts of things. But marathon running, I've ran a 90-kilometer marathon 4 times. That is the Comrades Marathon held in South Africa every June. Now, when you are running, for example, you're going on your 60th kilometer, your body is telling you that you've been suffering for the past 60 kilometers, you still have 30 kilometers to go. What is the natural response of the body? The body just wants to stop. Now, interestingly, when you get towards the end and there's like a 2 or 1 kilometer left, you find that all of a sudden you get this sudden energy and you just go all out and you finish it off. I mean, how many times have we seen that happen in marathons where people just sprint to the finish line? That is because now you, at 60 kilometers, you were thinking that you've been suffering for the past 60 kilometers, and now you thinking the next 30 is going to be dreadful. So your body will naturally want to stop. So that's why they say marathon running is more about emotional strength than anything. What are the emotions that we're talking about? These emotions that we're talking about, fear. So that is it is a survival response. What does that mean in terms of marathon? If you're scared of the next 30, because of your fear tells your body that the worst is yet to come, so you need to stop. Now, same as trading, you're in a losing trade. You're losing money. Okay, so let me just give you the definition in terms of the emotion before we explain that. So fear is a survival response and probably the most powerful of human emotions. So when you're afraid, a trader will sell a position regardless of the price. Because you're thinking you've been in this trade, it's been making a loss, and now you just sell it because you're scared. You don't know what's going to happen. So fear usually leads to panic. So, which again causes poor decision making. All right, so that is what fear does. It's a survival response. So you just sell the position because you're afraid. The next emotion is hope. So this is what keeps a trader in a losing trade after it has hit an invalidation level that you would have done, that you would have projected technically when you're analyzing the market. So your trade gets to a stop level where you had said you're going to exit if price reaches that level. Now you don't exit because you've got hope. And now this is a dangerous emotion as well. So it is irresponsible. Now the last one is regret. So now regret is defined as a feeling of sadness or disappointment over something that has already happened. For example, if you missed out on a trade or if you made a huge loss on a trade. So that is regret. Okay. So now, yes, we've heard of all those emotions. Probably every one of you have heard of all those emotions. How do we now control those emotions? But before we control the emotions, we need to understand where they come from. Why do you behave the way you do when you're trading? You know that those emotions lead to losses, but still you behave exactly that very same way. Right, so in psychology, there's a study of the human brain. So the human brain consists of 2 things. That is the neuron cell. That is the cell in the nervous system that transmits information to all parts of your body. Now, these neuron cells, they are transported via something called microtubules. You can go and Google this. It's all available on Google. So these microtubules, they support and give shapes to a cell, right? Now, the design of these microtubules is in the Fibonacci sequence, the Fibonacci numbers. Now, we're talking about Fibonacci again, right? So the brain has 3 fundamental parts. Let's talk about these parts of the brain and understand why we behave the way we do. I'm not an expert in psychology. What I've done, what I'm telling you is what I have studied, and that has helped me, because I don't just take things on face value. I ask myself, if this is the emotions that I go through, why do I go through them? How can I control it? Why does it happen the way it do? If you don't accept things, then you're always going to be curious, and when you're curious, you're always going to find information. Now, let's just talk about simply a brain, and this is one of the basics in psychology, the study of a brain. So the brain consists of 3 parts. There is what we call, you don't have to understand all of this, but the one that I want you to understand, let's first talk about all the parts. There's the basal, or the basal part of the brain, or the primitive brain. Primitive brain. Primitive. Okay? Now, there's also the limbic system. Now, this is the important one, because this limbic system part of the brain is the one that is in control of your emotions. This is the one that is in control of your emotions. Now, we're going to come back to this one because this is the most important one, emotions. And now, and also we've got the last one, which is the neocortex. So the neocortex is the rational part of the brain, or the intention, or the intelligent part of the brain. So let's just call it rational and intelligent. I don't have space there. Now, regardless of how intelligent you are, the collective behavior is governed by the limbic system. This is the one that governs everything in your brain. So you can be intelligent, your neocortex functioning properly, but the limbic system is the one that always takes control. So that is why it does not matter how good you are technically, because the limbic system that is in control of your fear, greed, hope, and regret is the one that always takes effect. Now, our rational thinking and reasoning, it becomes obscure under intense emotional attributes, such as insecurity. What happens when you're insecure? What happens when you're scared? What happens when you're excited? When you're having fun? Or something that is pleasurable? What happens in that case? Okay? So I want you to think about what happens in that case. You lose your rational thinking. You lose your rational thinking, and you take impulsive decisions, and you take decisions that are irresponsible, because your only function of the brain is the limbic system that controls all of this. So this is the one that causes all this behavior. Now, we are all hardwired the same way. So our brain is hardwired the same way. 2 weeks back, we spoke about what moves the market, and we said the market is moved by the reaction of the crowd to the market. Okay, so the market is moved by the reaction of the market. Sorry, it's the reaction of the it's the market mood. So that's what makes the market. So, and we also said that these moods in the market, they create patterns. They create patterns. Now, if patterns are created, it means that everybody in the market is thinking the same way. We are all hardwired the same way. Let us say we were not hardwired the same way. We will not see these consistent patterns that we see in the market. For example, the Elliott Wave patterns, 13 of them that we learn in the wave theory. We will not see those patterns because everything will be random. But it is not random, and they all form part of this Fibonacci sequence. Now, there is a study that has been done by scientists. So let's just hold on a second. So there's a study that was done by scientists where they took groups of objects and they observed how they react to different options or outcomes. So for example, if we are studying human behavior and we're given choices, so those choices, when they did the studies, they found that 60 to 40 or 62 to 38% of the time. So that's how the choices were. 38% of the people will take a certain choice, and 62% of the people will take a certain choice. Now, immediately when you talk about 38 and 62%, that's already close to 62% is 61.8. 38% is a 38.2. So this study has been done. I'll share the results on the exact studies that was done on people. They have found that people take similar choices all the time, and this phenomenon is called heading or crowd effect. What does that mean? It means that people will always do what everybody else is doing. People will always do what everybody else is doing, and that is the crowd effect. Isn't that natural? Haven't we seen that so many times? When somebody has got something nice, or somebody is being successful and we all want to be like them, or somebody has taken some decisions that resulted in something good happening to them and we all want to be like that, that is the crowd effect, that is the heading. So even the market, it is always mostly about the masses. Everybody thinks this price is going to go up and everybody goes in. And while everybody is doing the same thing, why is it only 10% of the people that are being successful? So to be successful, you need to do some things a bit differently and remove the emotions. And to remove those emotions, this is what I do personally. So for me to remove the emotions from trading, I do what I call set and forget. Now, what does set and forget mean? We've all heard this so many times. Let's say you've got a position. You've got a string here, that is your chart. It's going like that. You're expecting that with your analysis after this, the market is going to go. So the set and forget principle is this. You put in your stop loss to a technical area. You put in your take profit to a technical area. And now the amount that you are going to lose if the trade goes against you should be an amount that does not make you sad, worry if you lose it. And at the same time, the amount that you're gonna make should not make you get excited should your trade go in the right direction. So these positions should be positions that make you sleep at night. So now, if you've got a position and you've set it, and this position can go into a loss and you will not have an effect on your balance, and you've got a position that if you win and will not have effect on not much effect, maybe you win 4% of your account. So immediately it removes those emotions. It also removes you from watching the trade every single time. Now, the stop loss and take profit is a day-to-day thing that everybody does, but you find that people put in a stop loss, but as soon as the trade gets to their stop, they start getting the hope emotion that it will turn, and then they remove the stop. And you don't want to do that. You need to set and forget and remove yourself from the position. Why do you want to remove yourself emotionally from the position? You want to avoid the limbic system, the emotional part of the brain taking over, which will result in you making irrational and impulsive decisions. Okay, so obviously we only have 15 minutes to discuss this. This is much more deeper than this and also related to the Fibonacci numbers. So try by all means, when you trade, do not follow the masses. You need to make your independent decisions. Following the masses always results into losses. And sometimes the M in the masses is silent. Think about that. All right, so let's get started with our analysis today. I hope that helps you. So psychology in trading is absolutely critical. Anybody can have a trading strategy. Anybody learns support or resistance. You can even make money use trading support or resistance. It doesn't matter as long as you control your emotions. That's what's critical. Now, instead of spending so much amount of time learning the strategies, also invest in understanding the psychology of the market. I hope that helps you. Right, so let's get started. That's just a teaser of some of the things that we learn in the course, psychology of the market. Even if that is not incorporated in the 10-day course, we also have those sessions on our daily webinars. Right, so let's get started with today's analysis. Right, so for those that are gonna join the course, please make sure that you've got a Slack platform downloaded. That is what we use to communicate. That is our trading workspace. All the pairs that we discuss here, we've got charts for them. We've got different traders discussing them in our Slack group. We also have a specific channel where I've got my trade setups that we discuss with members. Okay, so because we've already spent so much time, we need to go drill down into it. These are some of the setups that we had on gold and silver, as well as euro, US dollar, and US dollar CAD. But let's go right into the market. We will start with the indices. Or rather, no, we'll start with the cryptocurrencies. Let's start with Bitcoin. Start with Bitcoin. Bitcoin. Okay, so I'm on the 4-hour here on Bitcoin. And we're looking at this. I'm going to go to the daily because it's critical to understand where we're going from here. We've got this three-wave move pullback, and this three-wave move looks incomplete. So if you look at this piece here, it looks like it has made a strong impulsive move. This is at the end of the move. This is a passive move. This is a corrective move. Now this move here could be making a last wave 4 of this part. So let's do it this way. This is the first part here. That is a 5-wave move that you see impulsively. Now, the second one here is this one, which could also be in 5 waves. So this could be an A, B, C move. So now if you're looking at this one here, you can't see clearly the 5 waves here because this 4-hour will sit clearly on the 1 hour. So we'll see here that is probably 1, 2, and it's making the wave 4 here. That can be something like this, where we make the 1 and then push higher. Okay, so let's have a look at this on the daily. What are we looking at on the daily? We need to see where this is heading. On the daily, the structure that we've looked at from the beginning of 2019, this has been playing out from last year. That's the structure that has been playing out from the beginning of July 2019. Let's switch off here, and I will share this structure all the time because it's absolutely critical for us to understand when this is going to be complete. Has it completed, or are we still gonna get more upside here, or are we still gonna get one more downside? So let's have a look at this one here. We're gonna first identify the pullbacks, that are the X waves here, because we've got an 11 swing sequence. I'm identifying them here. So what we are looking at here is a 3-wave move here. 1, 2, 3. Let's draw it cleanly. 1, 2, 3. 1, 2, 3. Now here is what we see, a regular flat that is 1, 2, 3. Here you see a expanding flat, and here we see a structure like this with what looks like an expanding flat. Now, if this is an expanding flat, what does that mean? It means we're going to have one more down. Now, let's label this for those who like to see labels without, who don't really understand the structures, right? Or that are just detailed. So let's do this for completeness sake. We see a 3-wave move down here, and that 3 waves, we call it a W. The pullback is always going to be the X. We see another 3-wave move to the downside. We're going to call this one a Y. Pullback here in expanding flat as the X. Now, 2 things here have happened. Either this 1, 2, 3 has completed the Z. That's what we need to figure out. Is this the Z, and is it in place? Now, it is possible that this is not necessarily the Z, but rather the lower degree. That is what we cannot see clearly at this point. Now, this could be the lower degree A, and this is the B. This is the B here, which is the expanding flat, and then we'll be looking for downside. So now let's have a look here. Are we going to come down? It looks like we are going to come down for this one. If we're coming down for this one, that means this is your simple W. This is a 3-wave move to the downside. Draw it clearly. And we're going to have this pullback here. Now, there are 2 things with this pullback. This, if you look at this, you've got a lower degree W, X, Y here. Now, if it makes one up, in 3 waves. It could be making a Z and then still come down. So it will not change anything if you get one more up on Bitcoin here. It will simply be making this structure. Now let's label this internal structure so you can see where that comes from in terms of degree. You'll see that you've got here WXY in the lower degree. You've got ABC here in the lower degree. You've got ABC here in the lower degree. You've got A, B, C expanding flat in the lower degree. You've got A. No, rather here, if this is the case, if we're looking at this as an 11 swing sequence, we're going to be looking at this one as a W, and this whole 11 swing sequence as an X, and then we'll be looking for the last Y. See, so that's what we're looking at. Either, so you see, as much as we've got an alternative, the trend that we're forecasting is for one more down. We may have a slight push to the upside, but eventually that should come down. Now that push to the upside should possibly come with divergence on the RSI. Now you could find that this one is making a correction here for one more up, goes up, makes a new high, but your RSI does not make a new high. That is telling you that the trend to the downside would have started here and we're going to continue lower like that. So what do we need to watch out for here on Bitcoin? We need to see if this is going to push up higher and give a setup for upside. When you take this upside, take cognizance of the fact that this can only be the last swing. This will possibly be only the last swing of the corrective structure here, which is WXY. So if you don't get this, it simply means that this was your 3-wave move and that has ended here. So we are going to watch that from happening, watch and see what happens there. If we get a setup for downside here, we're going to look for this one to have completed a 3-wave pullback X and then the last Z that we're looking for. That is the structure on Bitcoin. Let's go to the lower degree for hour to see what we're getting there. Let's go into the auto scale here. Okay, so as far as the lower degree is concerned here, we're looking more sharper to the downside. There's no confirmation for upside here. It looks like we're still going to get to the downside. So we may get a setup here. If you just look at this one here, it looks like we're setting up for more downside. So we've got this pullback. We've got this one here coming down correctively. Can come down here and one more up, making this corrective structure and continuation to the downside to go and complete our Z. Okay, so the more Bitcoin pulls back to the lower levels, the more you should be putting in long-term positions because Bitcoin will eventually skyrocket. Okay, and basically the whole crypto market. That's what I see in the charts. Let's just have a look here on the weekly. Let's just show you the weekly to see what's going to happen with this and what we're focusing. As much as we're getting this pullback, this is what we're looking at. We may, when this corrective structure is done, see, this is the corrective structure on the weekly. Let's take off that. This is the corrective structure on the weekly. We saw this one playing out from 2018, the whole of 2018, this corrective structure was playing out, and we eventually pushed up higher. Now, this is only the first swing of the correction, and we are busy correcting here. Now, what we are looking at is for this one to give us the last Z, and after that, we should go retest the previous highs. Now, we can come and retest the previous highs with a 3-wave move and come back for one, and then go back up and retest the 20,000. So we know that this is still going to take time to break the previous high of 2018, where it reached about 20,000, because the market does not move in a straight line. Could take a couple of years before we actually make that move. Now, if to just give you an indication of what that could do, is that this Bitcoin can do this, 3 waves down, 3 waves up. It can even make a passing move back down to the lower levels and eventually make this big structure. What will it be doing? Just simply making patterns, that's all. Now, we've got enough data to tell us that this is a corrective structure, can come down here for one, which is very likely, and then push up higher, retest the top here. So we are going to trade as and when we see the structure. For now, we're going to be looking for this to come down. That is Bitcoin, and the rest of the cryptos will be like that. I'm just going to look at the lower degree of the rest of the cryptos here. Let's look at the 4-hour on Ethereum. Now, Ethereum, you can see the structure is similar to that of Bitcoin. We could have something like this. Now, let me show you what the possible structure could be here. So you see that there's a pullback here. And that pullback, let's draw it in yellow. That pullback is coming after 3 waves down. So we've got 1, 2, 3 here. That pullback is coming after 3 waves down. Let's take this one off and do it with a different color. If you look at this one here, showing this one in purple, you see that there was a 3-wave pullback, very clear 3-wave pullback. Now this could be another 3-wave pullback here as well, where you see that there's a pulsing move here. Let's use the green here. See, in this degree, you've got a pulsing move. This one is correcting, can come back down, do that, and do this. Now this can result in the last move coming down like this. The downside that we're focusing on Bitcoin. What structure will that be on Ethereum? W, X, Y. That will be a very nice structure. So we're looking for a bit of, this one is correcting, should come back down in small move, but we're not trading within this structure. What we want is when this confirms, we want to trade this. And when that is done, we want to trade that. So that is Ethereum, and all the cryptos that we look at here in these webinars have got a similar structure. Litecoin has got the same structure. As you can see, it's exactly the same. It's W, it's 3 waves down, pullback. It's another 3-way move to the downside here. It's actually a 5-way move here. This one could be A, 1, 2. Again, same structure. Could be a W, X, Y, so it means a double correction. Now this Y, I'm forecasting a zigzag, guys. It does not have to be a zigzag. It can be any structure. It can be expanding flat or any of those corrective structures. So you just need to understand which one it is. So it will obviously have to be in the same degree as the first one. If it's a running flat, if it's an expanding flat, then you get a move to the upside. Then that will be complete. So it does not go in a straight line, and it's not just zigzags in combinations. It can be any of the 5 corrective structures that we know, and that Elliott has discovered. Lastly, on the cryptocurrencies, see there was a spike on Ripple. I don't know if it is on all the pairs. Let's just have a look here. So this is a 3-wave move. So this one essentially has ended here. If this spike is real, I need to check this. I did not see this one on Ripple. So we need to check if this is real and it's available on all the brokers. Somebody can confirm right here on the webinar, so we can update before the webinar is over. Please confirm if you see the spike on any other broker except for this one. Right, so we've got this one on Ripple. So if that is the structure, remember, even if it's a spike, if it's a real spike and not just a broker spike, it should be considered as part of the market structure. So if that is the case, you should get a corrective structure here and a 3-wave move here, and it should be a W, X, Y structure. Now, if this is not real, your correction is going to start here and make an X, right? So that is what we're going to be looking at. That is Ripple. Right, the indices. Let's start with the S&P 500. I've projected 332 as a point of pullback. Where are we? This, if you look at a couple of webinars back, we've projected that at exactly 332, we should have a pullback. And I said the pullback that we're gonna get at 332 should alternate. Here you see that we've got a sideways move in wave 2, 1, 2. So typically your wave 4 should be a sharp wave. Okay, and then upside. So that will be 3, 4, 5. Okay, let's show the exact structure with labelings here on the S&P 500, what we're looking for here. Right, so now, I'm not saying that this is as confirmed yet, so this does not mean a pullback at all compared to this structure. Let me just draw the whole structure. I'll only do it for this one. For the rest, it's exactly the same. That is for the Dow, for the NASDAQ. Yeah, for the Dow and the NASDAQ will be exactly the same. Now, this is the wave 1 of 5, and we see that wave 1 pulling back in 3 waves. So we are calling this 1 and 2. Now we're saying that this is an internal structure where it starts with a pulsing move again, 1, with a correction, 2. Now we're saying that this is a wave 3, which we have focused that it is going to turn at 332. So that can make a pullback like that to go and make a wave 5. So we want a decent corrective structure, similar in size to this, maybe sharper than this. This one was more sideways, but we want something more sharper. It does not have to be. So it's just the alternation observation. So you find that when this goes sideways, this one makes a sharp move. So let's see if we're going to get a sharp correction from current levels on the S&P 500, and that will make a 1, 2, 3, 4, 5 internal structure on this one, and then we're going to expect a bigger wave 4 that goes sideways. Remember, this one went sharp. This one on wave 4 should be sideways. Not necessarily, it's just observation. It happens. If it doesn't happen, it does not mean that your wave count is wrong. So this is a higher degree, lower degree, lower degree. Can you see that in the higher degree, this one was sharp. In the lower degree, your wave 2 was sideways. So you'd typically expect the alternation happening here. Now let's go into the lower degree here and see if we're going to have that pullback if it's been confirmed. Right. So we can see that there's a bit of a pulsing move, so we need to get a decent pulsing move here in the correction for us to start looking at this as a pullback at that level. We have forecasted that at 332, that's when we should start seeing that. So we need to observe and see if that is the case. The trend is still up, we're waiting for pullback. If we get a deeper pullback like I'm forecasting, we should be able to ride the rest here to the top. There's the S&P 500, and I'll just run through the NASDAQ and the Dow and the NASDAQ because it's exactly the same structure. If you look at the Dow, you see it's still exactly the same structure, no changes there. It's a pulsing move up, it's a correction, that's 1, 2. And you've got here 1, wave 2. This one is already past the projection level. It actually has not reached the 1,618 as we've projected on the S&P 500, which is fine. So we'll expect this one to also make a sharp pullback. After that, we get a, let's do that, be a wave 5 in the lower degree, wave 4, and then a 5. And that will be a complete structure that we're looking at. Okay, so here also we see this mild impulse. We see the impulse here. Let's go to log scale. So that's impulse here is not confirmed until you get a corrective structure. And our indicator will confirm if this is the pullback and if this should come down. That is the Dow, the NASDAQ, exactly the same structure. Let's go to the NASDAQ. You can see that we also have a pullback. So the NASDAQ had already gone past the projection level, which is okay. They are correlated. Let's show the structure. Let's clean up the NASDAQ. This was when we were still looking at this as a diagonal. Let's clear all of that. Let's clear all that. All right, so that is the NASDAQ, as you can see, also same structure. Just to repeat, exactly the same structure. 1, 2, here, we're already here at the third wave of the red. We're looking for this one to make that. Now this is the wave 5 that we're trying to build here, and that should come with this wave 4 to the upside. Obviously it should be a little bit bigger, 1, 2, 3, 4. Now we're looking at this piece here at the top. Is this the reversal? Does not mean anything at all. Some may call it the bearish engulfing candle. Does not mean anything. It has not got any confirmation as yet. We need to see and get that confirmation. For all we know that this can just be a pullback in 3 waves and just continue higher before we get that. So once we get confirmation, then we will update those pairs. All right, so that is the NASDAQ. Let's run through UK 100. Let's go to the UK 100. Now the UK 100 is doing something a little bit different, where it can push higher and make one more up. So we've got this expanding flat here. After the expanding flat, we saw a pulsing move. This one can make one push to the upside, and we'll then see a pullback. We want to see that it gets to this level. This is structural level. the structural level. So we want to see it if it can get to that level. So if we get a corrective structure here, the UK 100 can make one more move to the upside to at least this level before coming back down here. This move to the downside should be correlated to the pullback in the S&P 500. So if we have to look at the whole structure here, that is where we are with this three-way move here, 1, 2, 3. You had this three-way move to the downside, and then we're expecting that if this is the move to the upside, that will complete the structure there, and then we get moved to the downside here like this. So what will that do? You'll have that structure, you will have this one coming here, and you'll have this one going like that. So for now, we see that corrective structure, but we see a pullback as well after that pulsing move. So that is not confirmed, so we need to see. Are we going to get this one to go sideways? If it does, we're going to make a new high and then come back down. That is the UK 100. The DAX, let's look at the DAX. The DAX also looks like it wants to make one more up. So on the DAX, we're looking at this last move as a diagonal. We're seeing a 5-wave move on the DAX. As you can see, 1, 2, 3, 4. We're looking for this one to be making a diagonal. 1, 2, 3, 4, and a 5. So we're looking for this diagonal, after which we should get a pullback. Now the S&P 500 may have one more up based on what all the other indices are doing. Let's just show you the whole structure here on the DAX. So you see on the DAX here, we've got a 5-wave move with a diagonal to the upside. We've got a corrective structure here, and we've got this 5-wave move. That's why it's a clear ABC structure. So we just want this diagonal to complete and then a move to the downside. We're supposed to have divergence between 3 and 5. Let's see if we've got any. We've got very strong divergence, as you can see. Here it's making a new high. The RSI is making new lows. So very likely that this is going to pull back. As much as it can try crawl higher, this is definitely going to come down. All right. While we're still at this, guys, so we've got two very high probable trades in CADJPY and Pound New Zealand. We're going to look at those when we get to them. So just make note of those. Mike, also please make note of CADJPY and Pound New Zealand as trades of the week. They look like high probable trades. Okay, so this is the DAX, and you're just looking for this one to crawl higher. There's a corrective structure here. Should push a little bit higher to complete that wave 5. But it's risky to trade this like that to buy there because it's already made such a big move. So only wait until you've made that big pullback to ride the trend to the upside. That is the DAX. And lastly, not lastly, the NIFTY. Not the NIFTY, the NIKKEI. NIKKEI is pulling back mildly with a corrective structure. So that means can also push a little bit higher as well. Okay, you can watch last week's structure to see last week's webinar also to see exactly why we're thinking that the NIFTY will get to reverse after pushing higher than this. We saw this pulling back as a corrective structure together with the S&P 500. We focused that this was going to push higher. So we are currently going to be breaking this this previous highs here. So, but then that will be completing these 3 waves here, and we're getting that pullback. That is the NIKKEI, and lastly, on the indices is the NIFTY. Now the NIFTY also has made a pullback, but it looks like we're still gonna push higher. Indications are still for upside. So still gonna make one more up on the NIFTY. We've got a pulsing move, corrective one here. Still gonna make a move. So we've already broken the all-time highs on the NIFTY. So we just want to see continuation here. It will not go on forever. And as you can see, there's definitely should be divergence with this. It's making higher highs and higher highs. We should be seeing lower highs on the RSI. Very clear lower highs. So that is your divergence. You see that is making lower highs. This one even gets deeper. So this is going to break to the downside eventually. Even if you can get this one crawling up higher like this, we're going to come down. Definitely going to come down. That is the NIFTY. And that's all on the indices. Now let's go into the US dollar pairs. The US dollar pairs are now very interesting. By interesting, I mean a clear structure. Let's look at Euro US dollar. Euro US dollar projected that this was going to make a move right from the blue box. We focused on the blue box in our group, that it was going to reverse there, not an inch higher, not a peep higher, and it has been coming down like this. So last week we were correcting here. During the webinar, said we're going to get continuation to the downside. If you watch the webinar, that's what exactly what you got. So you had three-wave move to the downside, W, pullback, X. That's why we said this is going to be here, and we're going to have a move to the downside. Now we're almost at target. Our target was actually down to this level, minimum down to this level. Okay, so let's have a look at the whole overall structure on the daily. You can't just go and sell at current levels because you will not have a place to put in a stop loss. So if we look at this structure, we could get this one coming back down to this level and bouncing up like this. That will result in making this structure. Remember what I've always been wanting? After this big move, I've always wanted this to give us a deeper corrective structure, or not necessarily deep, a structure that goes at least back to the 50 to 61% of this whole move. So that can come back in double corrections. So it can come back like that. So that means with the euro, we can stay extended here for a while with this structure. We're still coming down. We need to see if we're going to get that bounce back up here. Let's watch. Can break here and make an expanding flat, can turn it anytime, doesn't matter. What we want is to see this corrective structure complete. When it's complete, we get a move at least back to this level. Okay, so that is the euro. For now, it's coming down. You just need to keep watching any entries to the downside. Sold it here, opportunity here. I did say that it's correcting here, so it should come back down here because it's not going to bounce back up for a flat correction. So now the target is here. Okay, so that is euro US dollar, pound US dollar. Now pound US dollar, very nice structure. Like I said, the US dollar pairs have got a very nice structure now. So if you look at pound, I'm looking at the daily. You should have a very nice view on the daily. So if you look at the daily, you've got a pulsing move, which came towards the end of 2019. Now from there, we see this structure, a pulsing move up, a three-wave move down, a three-wave move back up. Now you're expecting that your pound pair is at least going to come back to this level around 129. So now that is your trade for the, not the trade of the week. That's what you're expecting in the next coming week. You're expecting the 129 area on pound. That is about 170 pips from current levels, but you need to wait for an entry. So from there, we'll expect a bit of a bounce there. Pound does that. We do this, and then we continue higher. Remember, the trend on pound is to the downside. So even if it comes back to this level, pound should continue higher. But for now, we've got enough data to tell us this is going to retest the 129 level. Let's see how that goes. I'm going to go to the 4-hour and see how you can trade that. Let's have a look. Now, for you to confirm that this is coming down, let's get this one auto. You need to get a pullback. Get a pullback on the 1-hour, the 4-hour, then your target is back to the 129 level. You see the move looks small on the daily, but on the 4-hour, you can see that it will be a decent risk to reward ratio trade. The stop loss double here, entry there, target there. So it's a very nice trade to look at. So the pound pairs in general, they look like they're going to be coming down in the next coming sessions. So wait for this to pull back and then sell it down to that level. Straightforward. That's a pound, US dollar CAD. We have been looking at this structure for the last couple of, I think last 3 weeks or so, looking for this one to come back down here and make a structure to the upside. Eventually we made a move to the upside. So that is a simple three-way move to the downside here. So what you had here with US dollar CAD, you see the move to the upside, pulsing move to the upside. We saw this and we've been discussing this all week in our daily webinar, that as soon as this corrective structure is done, we're going to push higher. Now we see that this one started with a move to the upside, made an expanding flat, but did not quite give an opportunity to take it from here because that move went a bit too fast. So that is the structure. We've come to this level. Are we now going to get another continuation pattern here? If we do, then that's what we're going to wait for. So we need to wait for a continuation pattern here for upside on US dollar CAD. US dollar CHF. Now US dollar CHF, we see a three-wave pullback. This is a three-wave pullback. That is 1, 2, that is 3. Now we see that this has made a pulsing move to the downside, but this move to the upside looks pretty much corrective, which means it can come back down and continue up again. If it's continuing up again in three waves, that means we're going to have continuation to the downside, where this simply makes AWXY pullback. So we just need to see if we're going to get that set up here for downside. Right now, you don't have anything. You're not buying, you're not selling there. That is US dollar CHF, Audi US dollar. Audi US dollar, just look for continuation to the downside, should come with the euro. Should come back down, should continue coming down with the euro. Right, so where we've got a clear structure is on New Zealand US dollar. New Zealand US dollar, we saw this structure, and we've got a good structure here because you can see why euro New Zealand should continue lower, because it made a 1, 2, 3 wave structure here. We saw this three-wave pullback. We've been talking about it as it was forming. Now, why do we want why do we want New Zealand US dollar to continue down? It's because we see a move down, a correction, and this one should complete this move. Now it's going to be 3 down W, 3 up X, 3 down Y. This is why we're convinced that Audi US dollar will also take a move to the downside. So now to trade this, you want a pullback, you want an entry. You don't just go sell there just because I said so. Okay, you must get confirmation and you must get an area where you're going to move the stop loss. So that is New Zealand, much clearer than the Audi. And on the US dollar pairs, the last one is US dollar ZAR. Now, US dollar ZAR looks like it has made a three-wave move. We wanted this one to continue back to the top. Now, US dollar ZAR is going to go to, we're going to see strength in the ZAR. Let's go to the daily. We're looking for it to push higher, but the structure is showing us that this was only a pullback. Now, we're going to see strength in the ZAR, and I'm expecting the ZAR to come and retest this level here at 1385 and even lower. Okay, and even lower. So we're going to see strength in the US dollar ZAR. Right, let's look at this one on the 4-hour. As you can see there, this is coming down. Everything is confirming that we're going to have a move to the downside. You've got a flag there. You're going to have this one here, correction here. You're going to go back to the 1385 on US dollar ZAR and even break a little bit lower, but rather move to break even at this level, or move your stop to break even here, or take profits at this level and wait for another entry if it breaks, because there's a very likelihood that it will break. So don't be greedy, rather just take profits here at this level. So US dollar ZAR is looking very good. It's a very nice setup for the next week. Let's see here. So you just want a correction here, small correction really, and you want this one to come break the low here, or even lower, as you can see. Okay, that's the old one showing that it was gonna come down, still coming down, as you can see. Correction, look for downside. Now let's look at the yen pairs. Yen pairs looking very interesting. Now this is pound yen, so as I've said, the pound pairs are looking downside. This is pound yen on the daily. There are two ways that we're looking at this in our group. It's a bit of a tricky one to see whether this is the orthodox low of this, or if this is the orthodox low on this one. Now, two things. If this is the orthodox low here, that means the correction starts here, comes back out down here, goes up here, one down, and then it's going to go up and down. Orthodox lows and highs are critical because you need to understand the extremes of the swings. If that is the case, you've got A, B, see structure like that. So it means you're going to have one more down and one more up here before coming down. Now, if this is the extreme, it simply means that this is all the correction. If this is the orthodox low here, simply means that this is the correction, and we should get this one coming all the way down. Okay. So orthodox low here results in one down and up and then downside. Orthodox low here simply means a single correction and we're going to come down. Now, either way, we know that this has to come down, whether the orthodox low is here or there. So we need to get a setup to take it back to this level. So both biases are to the downside, whether it is here or here. We're looking to come down to this level. Wait for a setup in the lower degree. Let's go to the 4 hour. So that's setup in the lower degree. You need to get another confirmation. This was the first entry where you should have sold. You need to get another entry here and take it at least back to this level. Okay, so the bounce here will tell us which one is the orthodox low and which here. Okay, so if you don't get a bounce and you get a correction instead, confirmed that this is the orthodox low here at this point. So wait for this US dollar yen. So US dollar yen is pulling back as we want it to at this level. I've got a setup here where I want this one to correct and then push higher. So this correction is just getting deeper. It looks like a 5-wave move. We should get a deeper correction. Even if it retests the top here and come back down here, US dollar yen will still push higher. So we just need to see the correction here building. And if we see one like this, we can still sell for one more here. Then you get the 3-way move to the downside and a move to the upside. I just don't think it's going to go in a straight line like that. It may even do this. Let me draw it cleaner. Do that, make a flat and go. So a flat is a better corrective structure here for the size of this swing. So either way, we're waiting for this one to correct, get this one. If we see a reversal, we'll be trading this one for upside. That's US dollar yen. Euro yen. Now Euro yen, you have to see the weekly to see where we're going with this. So initially I was looking at this to have made a 3 up, a 3 back, and I wanted another 3 to the upside. That is still possible. You can find that this is a 1, 2, 3 here. It's just that this is too sharp for it to go to the upside here. Let's switch this off. But I'll show you what the weekly says here. 1, 2, 3. Let's take this off. Let's get the purple again. So we see that we've got that one here. You've got a W that is 3 waves up, and X, and 1, 2. We have not got this one as yet. So it is possible that this is the end of the move, and we're not going to get that one more up here. And that will be a 1, 2, 3 with a short move. Okay, we can be coming down from the current levels. But let's see why we should be coming down. I've kept saying that as much as Euro yen is going up, the overall structure on the weekly especially is to the downside. And you'll see here that on the weekly, doesn't matter where Euro goes, we're looking for this one to drop, even if it's just one more. Now, this is a big move as far as the weekly is concerned, because that is from 120 to about 113, 112. That is about 300 to 400 pips. Okay, so and I'm expecting that this will bounce back, break to the low here. So we're still coming down here on the euro. That move is not done. We're still going to come back to this one. So that's why if I get a setup for downside here on the 4 hour or the daily, I will take that, and that will confirm the end of that move. Okay, on the weekly, that's what we have. And you can see that this move is not even strong. It's going to come back down. Now wait for a setup on the euro for downside. Even if that one more up does not come, if you get a setup and confirmation for downside, take that move. Right, so what possibly could have happened here is that you could find that this last move is actually this one, which is 1, 2, 3, and that actually makes a lot of sense. And this has completed WXAY, even if this is a slightly shorter than this one, but it is still a move up, pull back, and a move up. 3 waves, and we're looking for this one to come down here now. If we get a setup here for a sell, we take it and we take it back to the lows there. That is EUROCHF pulling back strongly. So CHF here. It's a simple impulse now. So same as the euro, we're gonna wait for an entry here and downside. Now, if you look at CHF, I don't usually show you these structures. I just want you to understand why we've got the buys that we have. We're not just looking at a single move. Now look at CHF, and I'm just showing you this piece. If I had to show you the whole cycle, then you'll have more confidence in trading this. So what we see in CHF is a move to the upside, and we call this one the AB base pattern. The subject for another day. We don't discuss this one here. We learn it in the course. So you see a 3-wave move down here. Do you see another 3-wave move back here? Don't you think that this is going to make another one here? So if you've got a 3-wave move up and a 3-wave move back, shouldn't this come back down to this low and make a bounce to the upside? So if that is the case, that means we should be looking for entries here for downside on the CHF. And you can see the CHF is correlated to Euro Yen. We should come back down. So that is how we're looking at that. CHFJPY and EURJPY, we're looking for downside. We have got an impulse already. Let's see if we can get a setup for downside. It's not there yet. Right, Audi, Yen, same as the Euro. We wanted one more up before coming down, but that could have also changed. We were looking at this one to have made an expanding flat here and expecting one more up, just like it did here. If it doesn't come, that simply means that this is a 3-wave move to the upside, pull back, and this one could be a structure like this. We start getting setups for downside here. Now, if we start getting setups for downside confirmed by our indicator, we're taking it back to this level. So for now, we don't have setups as yet, but watch for this. This could be critical, very good trades if they set up. New Zealand coming down, retest here, should possibly come back up and do this. So New Zealand can still make one more up before coming down, but there's no clear setup here. Should just be pulling back here in the week, right? That is New Zealand. Now CADJPY has got a nice trade setup. Now if you look at CADJPY, we have made this 3-wave structure. You are looking for this one. This is the trade of the week. Look for a correction here. Look for this to come back down. Now, we're not just looking at this piece here. We're looking at the whole structure. The structure started here with a 3-wave move to the downside. Let's look with the yellow. Let's use purple again. We started with a move to the downside. 1, 2, and a 3. So that move is telling us it's 3 waves down, W. We're looking at this one to have made an X. That's why we're looking for downside on pound CAD. Now, this is confirming downside move on the CAD. We want to get confirmation where in the lower degree in the 4-hour that we can actually sell this one back to this level. So we don't just sell. You see 3 waves up, 3 waves back, 3 waves up, 3 waves back. So this is what is happening here. You've got that move to the upside. You've got 1, you've got 2. You are looking for this to come retest the low here. Okay, so let's look in the 4-hour. On the 4-hour, you already have that making an impulsive move, but you need new confirmation. You need a setup here to sell it to the downside. Now you don't have that setup. You don't have that confirmation as yet. Right, so that is what you have. Trade of the week. Look out for pound New Zealand as well. That is CAD yen. Let's look at silver and gold. Now silver and gold. So this one here. On the 4-hour. So silver and gold, we're looking for this one to make this structure here and go back to this level. This was last year. When we closed last year, we wanted this move to the downside and then upside. Okay, so it looks like it has made a short zigzag, right? So now we're looking for this one to have broken to the top here. The top has been broken here. The structure has been broken out here. Now, silver, you want to get this correction here. We should be going to retest the top there. It's this top if you get a corrective structure. So you simply have a 1, 2, 3 wave here, and now we're looking for this one to push higher. Alternatively, you can even look at this one as a regular flat. And then we're looking for one more to the upside. Okay, so what do we have here? We've got 1, 2, 3, 4, and a 5. And what you have here is an A, B, C structure. So we should get continuation to the upside. Switch off here. So that's what we have here. Now, you can confidently trade this one to the upside if you get a pullback and then upside retest the 1900s here and eventually the 20 area on silver. Okay, let's just see here. All indications are to the upside. This one is going up. You're not late at all, so you're looking for this one. As we've been looking for this one to have made a pullback here, to make this pullback, at least make this one here like that, but that's fine. It is sometimes makes a short zigzag. That's part of the guidelines. That's okay. Upside. Gold. Gold has already made its 3 wave moves here, and we're looking for upside here. So we're looking for this one to make one. So there's a likelihood that this gold can also do that and then push higher. Okay, so let's see. We just need to see if we're going to get confirmation here for another correction. And then we're going to be retesting the previous highs at around 1620 on gold, which can come back down for this one and push higher. Now the structure on gold, the overall, the higher degree structure on gold, it's a 5-wave structure. Show you here. What you see here on gold is a clear 1, 2, 3, 4, 5. So this current move here on gold is the last wave 5. So that's why we've been focusing gold the way we have been. We've been looking at this one to be making a wave 4, come back and pull back around this area and continue. And even this one here was a wave 4 in the higher degree, 1, 2, 3, 4, 5. So we want the last wave 5 in purple of the yellow 5. Okay, to make this overall structure. So that means here we've always been looking at this one as a 3-wave move, but because this one is making an impulsive 5 waves, this one actually means that it has got a 5-wave structure as well. So that means A, B, C structure on gold. We're looking for this one. Do we have divergence there? Let's check on the RSI. If we do, gold will be making its last move. We don't have divergence as yet, but this is not confirming any new high. RSI is not making a new high, it's just flat. Okay, so this one can break the new previous high here, and this one makes a new lower high. That will mean that gold will start its reversal there because it's not going to go all the way. That is silver and gold. Now let's go into the pound pairs. Pound pairs are looking downside. Let's go to pound chief. Pound chief, very nice setup for downside coming through. So we see a 3-wave pullback here on pound chief. Are we going to get this one to come back down here? That is the expectation in the next coming sessions. Let's go. If you're looking at the daily and what the other pound pairs are doing, this one can come back down here and do this, do that. But let's look for a trade here for hour. So on the 4-hour, we've made these 3 waves to the downside. We've made a 3-wave to the upside. Are we going to see this one now making another 3 waves to the downside? If it does, then you've got a W, X, Y, X, Z. Okay, so let's watch and see what we get here on pound. If we get a setup here, we're going to take it back down to this level. That is pound chief and pound New Zealand. Pound New Zealand, that's the one that I said is a very good setup. We've got 3 up, 3 back, and 3 up, and now we're coming down. Trade of the week, if you get a setup here, you're taking it back to this level or even lower. Okay, so that's what you're looking for on pound New Zealand. Trade of the week, make note of it. Watch, should be a very nice trade. Pound CAD has completed a pulsing move down, pull back. Remember, we were looking at this one to be making a V pattern and expected it to push higher. That's what happened with the oil news. So now what we have here is a three-wave structure. So that V pattern eventually came to make that structure. So we're looking for this one, another very high probable setup for downside in the coming week. If you get something like this, then you've got A, B, C structure, and then this one should push higher. Pound pairs are looking very interesting this week, so keep an eye on them. So Euro pound should do the opposite. Euro pound should push a little bit higher. Let's go to Euro pound. Euro pound has made 1, 2, 3 there. Okay, so if we're expecting the pound pairs to make moves to the downside, Euro pound should at least be making some kind of a pullback to the upside. Simple as that. Rest of the Euro pairs, EUROCHF still continuing to the downside as we've been forecasting. If you look on the daily, I've been talking on, we have only been talking about sales on EUROCHF. So EUROCHF, you can see it's got a very clear structure. I show this one almost every week. We've even traded this one from right at the top here. And now we're looking for this one to complete into the blue box. We've got a simple ABC structure here. I show this one, I've been showing this one the last 3 weeks. I've been doing the same thing for the last 3 or 4 weeks on this one, showing you the three-wave structure here, 1, 2, 3 here. This one we traded from here. You can check it from one of the videos. Just go around this date and check the video and see that we were looking for that structure to come back down here, and our blue box is around this area. So we've got a simple three-wave structure, WXY. There's no 5 waves, there's just 3 waves in the higher degree, 3 waves in the lower degree, 5 here, 5 here, and 5 here. So that means AB in the lower degree. Here will be WXY in the lower degree. Excuse me, I'm not showing the difference in degrees with the colors, but just note that this is the lower degree, and here you've got AB. That's why you see this one coming down impulsively, because it's a C with 5 waves. Euro New Zealand, downside. You keep selling the pullbacks. You keep selling the pullbacks, and I've shown you why EUROCHF still has a long way to go to the downside. So the next move is here, should break lower. Now the reason why you selling Euro New Zealand is this one here. It's because of the structure. Let's get to the yellow color. The structure is this one here, like that. You've got this corrective structure here in 3 waves, 1, 2, 3. We're coming back with down with this one. Every corrective structure is going to propel this to the downside, because we're looking at this as A, B, we're looking for a C here. So this is possibly a wave 4 on this one here. So only downside. EURAUD looking very clear for a downside here. That's the daily. You're looking for this. So this one has now broken this pullback that we saw last week. We spoke about this pullback after making this structure in irregular flat here. It's not a triangle. We've made a irregular flat. It's coming down like this. It's correcting like that, and we're coming down like that. Let's see. That is definitely coming down, even if it's going to make this first. But we're looking for downside on EURAUD. EURCAD. EURCAD also downside. If you look at this one here. So EURCAD downside, we've got this pullback in 3 waves. I'm not going to show the whole structure. I'm just going to show you that it's making a continuation pattern for further downside. We saw this one making this structure here, in 3 waves and coming back down. Now here's another entry opportunity. If it sets up, we're coming down with EURCAD. Right, some of the cross pairs, AUDJPY, continuation to the downside. We wanted to come take the low here. So we've got this 3 wave. Now the three wave is like this. It's a pulsing move down, it's a pulsing move back. Now we're looking for this one to come down here. So this could be the end of the move where we can start seeing a pullback. Let's see if we've got divergence there. We don't really have any divergence, so this one can still continue lower. If it breaks here and corrects at this level, we're going to continue lower. That is AUDJPY, and Audi New Zealand has to continue lower because of this. This is the structure that it has made. 1, 2, 3 pullback. We want to see it break lower. We want to see it break lower to around the 120, 1.00 area, basically at parity on pound New Zealand. It won't go in a straight line. At some point, we're going to see a pullback, and then this one is going to continue lower. CADJPY. Now, CADJPY is one of those interesting pairs. Now, if you look at this, let's say you're doing your analysis and you are looking at a structure like this. Where do you start? Look at this correction. It's so complex. It looks complex without any structure identification. Now, when you understand structures, you can see that this structure there, that is a 1, 2, 3 wave structure. There's another structure 1, 2, 3. We identified. There's another structure 1, 2, 3. 1, 2, 3. We identified. Now, what we see here is another structure we identified. There's 3 waves down here. That's 1, 2, 3. And what we see here is another 3 waves up. And we're now looking for this one to come back down in this wave. Now, what you see here, I didn't quite differentiate the color. It's the first 3 wave structure. That is A, B, C, which I'm going to call W. Second structure is X. 1, 2, 3. We're going to call this one Y. The last structure is Z. Now, we're looking for a Z to complete. Now, all of a sudden, this makes sense, doesn't it? We are here. We're waiting for this to pull back down. Now, that Z is a simple 1, 2, 3 in this degree, 1, 2, 3 there, 1, 2, 3 there. Can even make a deeper corrective structure for the last move before pushing to, before continuing. So the Z, this one should be an X, my apologies. This one should be an X in yellow. An X in yellow, that means we're still going to have a Z here before coming down. Z in yellow. See a bit of education there. And then we'll be looking for this one to the downside. Now, all of a sudden, that structure that looked so complex is not so complex anymore. We can even label it as ABC structure. WXY. ABC. WXY. We don't know which one is going to be here, but we know it's going to be a 3 wave structure and then it's going to come back down. Okay, so it can be ABC or WXY. And that's how simple it is when you understand structures. So what are we looking for? We're looking for this one to complete the X. Simple as that. AUDJPY. AUDJPY. Look for continuation to the downside after making this 3 wave move here. We're looking for downside. We're looking at this as a corrective structure. You're looking for this come down back to this level. That's AUDJPY, New Zealand. Now, New Zealand CAD. If we see this move coming back down here on New Zealand, we're going to ride it to the upside. For now, let's see if that structure, that corrective structure, is going to play out and we get a move to the downside. So it's not clear at the moment if this is a pulsing move correction and we're going to get one more down, or if this is all the correction. But it should come back down. So there's no confirmation for downside because the structure is still showing further upside. New Zealand CHF, same as CAD, also has a move in 3 waves. This one is correcting here, but it looks like that 3 waves has completed and we're going to start seeing this one going up. We're going to see continuation to the upside here. And lastly, oil. Oil is straightforward. Short this one that is going to reverse here, the blue box. Last year, before we closed, last week, we saw this one making a pullback, said it was going to come back down here. Now, we're looking for this one to come back to this level. What structure will that make? Let's have a look at oil. 1, 2, 3. Now, if you look at this one, it's 1 correction, 2. Now, if you look at this one here, it's 1 correction, looking for this one to bounce from this level. So what is happening here is simply A, B, C structure. We can go on and on into the whole cycle until we complete all the time frames. Just the last one here, if you're interested, you'll see that this one can also be an A in the higher degree. I'm just out of space here, and this will be a whole B, and then we look for this one to come back down here. Okay, so you're looking for continuation pattern on oil to come and retest this low here. Thank you very much for watching. Please don't forget to hit that like and subscribe button so you can get a notification next time I post another video. Hope you enjoyed this. Cheers, everybody. See you next week. Good luck trading. Bye-bye.